Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Let's go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go. It's generally related to three different topics: wealth building, commodities, and or financial topics. That's what I like to focus on. So let's dive in here. Let's see what people are talking about, and I'll interject my opinions. If you want to follow me, at Finance Square Finance, and if you want to follow and join our community, finding-value.com, that's where we've got a Discord server. We do midweek updates, and I do question and answer sessions on the weekends to help people figure out these markets. And obviously, I share my portfolio. I share my when I purchase things or when I sell things. It's all open, disclosed. So, outside of how many shares I purchase, I should say. Lawrence McDonald says the Fed just eased its policy stance into this. And this is the BLS CPI core services. We had a pretty aggressive move in 2021 upward in this. We've consolidated backwards, and now we are reaccelerating to the upside. So this deals with inflation, the consumer price index, and we are strengthening in the consumer price index to the upside, and the Fed just eased into this. Interesting mix there, right? Gary Savage, let's read a little bit on this. He says, so lots of traders fooled by the early intervention. The PPT couldn't hold into the close, and most markets closed near the lows, including mining stocks that failed to recover the 10-day moving average, as did gold and silver. Oil not only has a very ugly lower low and lower high pattern, but it has also closed back below the 200-day moving average. In fact, virtually everything failed to recover the 10-day moving average today. Stocks, semis, gold, silver, and miners, oil and energy stocks, the transports, Bitcoin, and bonds. If they lose control of the banks tomorrow and they break down, it's going to be game over. Again, it's best to accept what is actually happening rather than trying to rationalize what you want to happen. As long as price remains below the 10-day moving averages, there's nothing bullish. This is a good time to be on the sidelines while we wait for either a recovery above the 10-day moving average or an intermediate cycle low washout, in Gary's opinion. And that does make sense. We are seeing a lot of things sell off in the markets, and maybe we've got further to go to the downside, which is a possibility. I don't try playing the short-term market stuff. I've been left out before trying to time this stuff in the short term, and I just don't do it. I'm in it. I'm going to ride it for the fundamentals of the sectors and what I think the big macro picture, which is an inflationary environment over the next 5 to 10 years because of the credit cycle that we've got going on, and also because of the shortages that are developing on the commodity side. Robert Friedland, Sprott, the copper opportunity in one chart. So what we've got here is, it says copper is essential for clean energy technologies such as solar panels, wind turbines, and electric vehicles, as well as expanding electrical grids. As demand rapidly increases, copper miners may be likely to benefit from the expanding supply-demand gap. So we've got projected copper supply versus demand. And the copper supply is in this small red line in the middle here. And it's heading lower down here in the mid. So basically the deficit starts to gap at about 2025, where we get this huge gap that gets developed. After 2025, we're basically screwed, to say the least. From the demand versus the supply that we have. Prices are what's going to balance this out. But we've got a lot of stuff like construction, electronics, the grid, and transport that is sucking up a lot of copper in the future. We just don't have the mines to produce this amount of copper. Now, this is a great situation for investment. It's also going to put a lot of strain, in my opinion, on the energy area, because copper supply and the declining ore grades that we are seeing in a lot of these projects are going to push prices a lot higher, and it's going to take a lot more energy to get the same amount of material or more material out of the ground. Really, this is an earth-moving business for the most part. So I'm also bullish energy because this is really a derivative of energy. Tracy putting down the EIA and why crude oil sold off today. Crude had a build of 7.265 million barrels, Cushing up about a million, gasoline up slightly, and distillates down a little bit. So it's that build that we got that is bearish in the short term here. We've got Douglas saying, most of you don't need the Fed to cut interest rates. You need to cut saturated fats from your diet. Oh my God. I started laughing when I heard this. I had to share it, but it is probably true. Zero Hedge, it says, rest in peace, the housing market. Construction jobs openings implode from 456,000 to 274,000. Down about 182,000. Monthly drop is the biggest on record, but that's construction job openings. Now, could this be the beginning of a slowdown? Look at construction jobs and see if they're laying off people. Job openings, that's the openings. So you can get a slowing of openings. That could be the beginning of the beginnings. It could be. Now, the next thing to look for is to look for construction jobs where people are getting laid off. I don't know if we're at that point yet, and we'll look at those jobs. I've looked at some of the data already, and we really need this month to update for me to get a clearer picture. But maybe we are at the beginning of the beginnings, and maybe we do get a slowdown eventually, 2025, 2024, or something like that, late 2024. Here's the uranium joke of the century, says Devin Ubel. Says, on the day of Russian uranium ban, you freaking kidding me? Uranium Energy Corp was ripping it in the morning, and then it sold on off. Be careful with news, guys. A lot of the times they bring these news out, people sell into that strength. It's almost like they created it for buying, for people to get excited to buy shares that large institutions load into. And I don't know if that's necessarily the case, but sometimes they release these things right at tops. And I'm not saying we're at a top in uranium. Don't get me wrong. But remember, there's also the macro that's behind this. The big macro picture, you've got oil selling off. You've got some other commodities kind of taking a break. You've got Bitcoin diving. The overall stock market's diving. You've got multiple things going on here, guys. Uranium and the sector itself, I don't think will overpower the entire market selling off. I just don't think it will go up with the entire market selling off and being like sustaining a higher move. I think it will go down with all the other stuff if the other stuff does go down. It's macro that you really have to look at for some of this, and money flows. Warren Pye says Fed tapering QT from 60 to 25 billion per month. This reduces the Treasury's funding hole, deficit plus QT runoff, from 2.5 trillion to 2.08 trillion. And he says here the Fed is likely to end QT before its balance sheet hits 25% of GDP. So that's what is kind of going on in the background. Maybe there is a slowdown coming. Maybe that's why they're reducing QT, because it's like, wait, we got to taper this stuff quick. I know that they ran out of the reverse repo, and I think that has something to do with it as well. Here we go. The reverse repo piggy bank ran out, so the Fed is reducing QT already. They don't really want to withdraw liquidity, and this proves it. We'll be back to QE before you know it, in his opinion. And maybe that's why we're setting up with some of these patterns in oil and whatnot. And they haven't done QE yet. Maybe that's the case. Maybe it's not. I mean, we're trying to put together this puzzle with all this information that people are sharing and trying to piece it all together. Oil is nosediving after a bearish EIA inventory report. Geopolitical risk alone is not enough to keep oil afloat. Well, yeah, it's definitely from the bearish inventory report. That's for sure. Scrolling down to Kevin, economy is cracking. We've got the collapse of Starbucks is truly insane. The company-wide same-store sales fell 4% and traffic fell 6% this quarter. In China, same-store sales plunged 11% with an 8% decline in the average order. International same-store sales fell 6% while a 1.4% gain was expected. Management lowered revenue growth guidance from 7% to low single digits. Most loyal customers are looking for discounts. What happened to Starbucks? I can tell you what happened to Starbucks and all these other fast food companies. Their prices are way too high. So, when I look and I go to Chipotle, or which I rarely go to, but when I do, I mean, their prices are over. If I go eat there after tax, it's definitely well over $10, depending on what you order. And McDonald's, I mean, I never really eat there anyway, but the kids used to eat there every once in a while. Their prices went way up, and I'm like, I'm not going there anymore, even for the kids, And I don't eat there. I haven't eaten there for like 15 years or something. I also don't eat at Taco Bell or any of those other places. But I can go buy like steak at the store for cheaper than fast food. Yes, I have to make it at home, but I'd rather eat steak, vegetables, and that those types of things that I would consider to be healthier anyway. And if it's cheaper, I don't see any reason to eat fast food than to go to the store and go buy some really good food. We're talking like good food too. We're not talking like garbage stuff. We're talking like broccoli, some good ribeye steak. And the steak, yes, it might be a little bit more expensive, but you can eat it, half of it or something for a meal and then eat the other half later in the day or something. U.S. proved oil reserves reached a new record in 2022. Reserves declined from 1969 to 2006. Then we increased with deepwater Gulf of Mexico and tight oil. And there's your U.S. proved oil reserves, which hit a new record in 2022. Now, the thing that I get worried about is tight oil going to roll over? I think that's a possibility here in the next few years, and that's what I get worried about because that's where the majority of growth in the world came from tight oil in America. Peter says, my guess is despite overwhelming evidence of stagflation, Powell will push back against this reality later today. He will likely reassure markets that the U.S. economy remains strong. Inflation is still forecast to fall to 2% over time, and that rate cuts remain appropriate. Well, the only thing I'll say there is he can't do anything in these speeches to provoke any type of panic. So he's always, no matter what, going to likely reassure markets that the U.S. economy remains strong. He's going to say that no matter what. Bernanke did the same thing. So even if there is a problem in the market, they're not going to come out and tell you that. They don't want to create panic and have people panic in the markets. So they'll never come out and say, you know what, this economy blows and we're gonna see a huge slowdown. They'll never say that. If investors put 5% of total assets into physical silver bullion, it would be $350,000 an ounce. This type of analysis is silly. And he's referring to Cathie Wood. Says Cathie Wood raises her Bitcoin prediction by 2.3 million. According to Cathie Wood, Bitcoin could go as high as 3.8 million if institutional investors were to begin investing heavily in it. While the analysis is likely correct, it is unlikely that institutions would put 5% of their portfolios into Bitcoin within the next 6 years. Most institutions are not invested in Bitcoin at all, much less 5% of their portfolio. And, she was bagging on oil at the bottom of the oil market. And now she's really bullish on Bitcoin. Makes me think that maybe Bitcoin's at a potential top now that she's bullish. She's almost the anti, indicator, much like retail. What's wrong with the uranium sector? Russian uranium ban finally got announced. URNM is up 4%. CCJ is up 2.5%. Don't don't you fool me. It was all priced in already. Very disappointed. Press like if you share my feeling. Guys, I think everyone thinks that this like piece of news or something comes out and that uranium's just going to moon. Like it's just going to go straight to the moon. We're still very early in this commodity bull market, and I think the macro picture is very important to understand. So this isn't about getting rich as fast as possible. I don't think it's going to do that. I think there's going to be a lot of head fakes, and you just got to stay long and just forget about it. Like, don't be so obsessed with every little thing that occurs in the sector. There's there's macro tailwinds. There's commodity bull markets, and maybe we get a slowdown here before this commodity bull market really gets moving. Maybe it doesn't. Maybe we do right off the get-go. We're all wanting that same information, but no one knows exactly what the path will look like in the short term. I'm fairly confident that it's going to happen, and that it's going to happen over the next 5-10 years, somewhere in that time frame. But I don't know what the actual path will be, and I don't think anyone does. I don't even think Powell knows exactly what the heck's going on in this market here. They're all over the place. It says, wow, this is not good. The 4-week average U.S. implied oil demand for gasoline, distillate, and jet fuel heading a little bit lower here. So is there a slowdown coming? What's going on? Looks like we had that same type of slowdown in 2023, though. So we'll see. I'm going to hold my judgment. Peter Schiff says, today's economic data is conclusive evidence that stagflation is not just a future possibility, but already a current reality. April ISM, which is the manufacturing, tanked as orders tumbled and prices paid soared. Meanwhile, April job openings collapsed to their lowest level in 3 years, got gold. And that is the time when gold takes off. It's when the market slows down and inflation is still running. He's got the market conditions right. Kevin says, and I want to read through this a little bit. So he says, every commodity bull market, every bull cycle sees a labor shortage and also significant labor cost increase. During bear market times, workers see the weakness and are simply grateful to hold on to a job as options are limited, and they recognize the financial weakness of their employer. In this case, everyone at working for uranium companies recognizes that labor market is tight and profit margins are wide, even if some management teams screwed shareholders with bad contracts. They see the huge stock option profits being had by senior management. They want to take part in it. They realize that they are in a position of strength, and so they hold out for a big contract increase. This leads to disruptions in production during extended contract disputes, plus general cost inflation. Expect this trend to continue for the entire commodity supply chain. This is what makes a commodity bull market so powerful. Companies can't just ratchet up production. They have to pay through the nose to do so. 2 to 3 times cost increase become common. At the start of the last cycle in 2002, the operating cost for major uranium mines was high single digits. The start of this cycle, it was thought to be in the mid $20 for the low-cost guys and mid $30 for high cost. But by the end of this cycle, it will be $50 to $70 a pound operational costs or higher. All-in costs will be north of $100 a pound for new mines, in his opinion. So that's what Kevin's opinion is on bull markets and the potential cost increases as they go along. It's a trap. So this guy, put this up here. He says they print more money, causing inflation. So you have to invest in assets. Then put a capital gains tax on those assets so you can never escape inflation. There is a way that you can escape some of those taxes. You can do backdoor Roth IRA conversions, or you can do after-tax money invested into retirement accounts known as a Roth 401k, or you take that after-tax money and roll it into a Roth IRA. And you can do that. You might not be able to do that if you have it at an employer. You can't roll it over immediately. But you can if you are a self-employed individual. You put money into a 401k after tax, or you open up a Roth 401k and put money into it where it can earn tax-free. It's after-tax money that you put in and can earn tax-free. You also can use a health savings account and put in up to the maximum per year. It's different for an individual versus a family. Family is like $8,000 or $8,400 or something, whatever it is this year, which I have below. We'll go over it real quick. But there's also that you can partake in where you take pre-tax money and it grows tax-free. Z4 Energy Research, it says this is a good deal lower than the 1.8 million barrels per day Mexico reported in January as per Jody. So what happened here is Mexico's state-owned oil and gas company Pemex and its partners reported their lowest crude production in 13 years at 1.54 million barrels per day in the first quarter. So we are seeing some stress around the world with some of their production of existing fields. The Wealth Coach, it says, money is no object. You can pick any car to drive you want. What are you choosing? Well, if I had any amount and money is no object, I don't know, guys. I think when I was younger, I would have said some sort of like cool sports car. But as I get older, I don't think it matters that much. So if money is no object, I don't really care anymore. And it becomes more of like I really would like a normally aspirated larger engine and a very lightweight car, which is like a V8 engine. That would probably be ideal to me. So something that has a ridiculously good handling chassis with good power, good torque, and normally aspirated. It could be a V6 or inline six too. Those would also be good. But something that's got a lot of torque that can pull through the lower gears, that would be something that I would choose. Patrick Karam says, if you're wondering why silver is freezing up, all you need to do is look at its quarterly chart. I can't overemphasize the importance of the wall at $27 an ounce. 11 times it was denied, making it a critical level. Bullish momentum is putting upward pressure on it. And that's where we've got the momentum going up and we're right at that strong resistance line. We've got a lot of strong resistance, even in some of these oil companies that are at necklines of stuff. So yes, we've got silver here. It's at that $27 resistance level. The momentum is pushing upward on it. So we'll see if we can break here, guys. And this is going to be a huge break if we move. I also think that we are at a critical time where we've got the yield curve inverted, and when that normally uninverts, that's when gold and silver take off. So that's all tailwinds behind it. I think we're going to break, and 27 is a critical level. Do you ever worry that you are over saving for retirement? I actually think that, yes. And as weird as that is, I think I'm probably oversaving for retirement. Now, someone will say, how can you oversave? Well, if you put a lot of your money into stuff that you can't take out till 60 plus years old, and you put a lot of money into it, you could be oversaving versus keeping some money out so you could retire earlier, and then also put money in your retirement account that you have later too. So it's a combination of those two things. But when I was younger, I put a lot of stuff into retirement savings, Roth IRAs and 401ks to reduce taxes and also to save for retirement. Christine says, so the Permian is bottlenecked in April due to natural gas takeaway and poor grid demand. Meanwhile, OPEC production is falling according to the survey. Commentators are telling us that oil demand need to uranium any longer, and we've pulled back to the 50-day moving average. There's too much focus on geopolitical risk and not enough focus on actual supply and demand. Why talk about basic fundamentals when the market prefers trading volatility? So it's a good point, and we'll see. I know we had a recent inventory addition, but supply demand is getting tighter as we move forward. Will the demand stay up there? That's really the question. I don't know. We'll have to wait and see. Sear Scott, uranium, he says the next leg up is the main leg up in uranium, is what he's seeing here. So this is basically wave one with a little pullback, and we got a big leg that's coming. So we'll see. We'll see if that plays out that way. And here's your investments for 2024 in terms of account limits this year. $7,000 in a Roth IRA, $23,000 for pre-tax money in a 401k, $4,150 in a health savings account. I think that's an individual or something like that. We've got $69,000 for an SEP IRA, $16,000 for a simple IRA, $68,000 for a solo 401k. I think this is actually, is it 68? I thought it was a little higher than that. But that's what it is. We've got the distribution stage has come to an end. Next up is a markdown or sell-off. It's a story as old as Wall Street itself. And what we're looking at here is Bitcoin. So Bitcoin, investors plow $53 billion into Bitcoin's ETF. This is a distribution phase and a potential move lower with the MACDs going lower. It does look pretty toppish to me. And that's what we've got for today, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. We still have May Day going on for coupon code, May Day. And that's all I've got for today. So we'll catch you later. This is Finding Value.